We know, Rich. At this point, we know when you're eating.
Yes, we should. I eat every episode. It don't change. What up, though? Welcome back to another episode of Unapologetically Black. I'm your host, Mr. Rich, Mr. RDI, and we got our other hosts.
Rude. Wait, it's the fact that he was trying to like scoop up the corn, and then we got.
But we got Britt, Miss AKA Ashley, and we got my boy Bradford. What's happening?
What's happening
today?
I'm cooling. I'm cooling. How you feeling?
Oh
How your
man,
week been?
It's been optimistic. Let's say that.
Okay.
I've been optimistic the whole week.
That's good.
Things can get good, they can get bad, but you stay optimistic and go with that. So let's go with that. How y'all week going?
I've been cooling. It's been a pretty good week. Just like I said before, just kind of juggling this new job and trying to figure out the best way to get 15 people into job training at one time. Because it's been like, I'll get 24 people who are interested, 12 people who show up to the info session, and like 4 people who sign up. But I need 15 people at once to get paid. For the class. I mean, kind of, because the classes run every like 3.5 weeks. But if I can get 15 people into that class, I get 3 stacks. So each 3 weeks I can, bill back out. It's been kind of touch and go. I've been playing with Indeed. That kind of works, but Indeed wants you to pay every day, so I only did that once.
They got a free version on Indeed to put out ads. They got a free version.
To put out ads?
Mm-hmm.
We'll talk.
Yeah, I use it for my hiring and stuff for the escape rooms.
Okay, I'll figure it out. Because they were trying to charge me $50.
We'll pay the shit over here.
I don't know about that. I don't know if it worked yet. No. I feel that.
Well, Indeed works. Most people, when looking for jobs, do go through Indeed. It's like the biggest brand that people know when they need a job.
Absolutely.
So yeah.
Which is why I used it. It was just using it for, what the fuck are you doing? Using it for like
that boy over there clanking and banging.
Just throwing shit around. Using it for job training as opposed to a job. You know what I mean? Most people on there looking for employment. Right. And the program that I'm trying to get you into, while at the end of it, we do job placement and I find you a job in the career you'd like to be in.
I was going to say that.
I was going to say that.
Like you said doo-doo.
But it's a 7-week program and most people see that and they freak out and it's like 7 weeks. But I mean, how long have you been looking for a job though? Realistically speaking, most of them have been looking for a break. So
yeah. I mean, are they paid during the 7 weeks?
No. That's
I could spend 7 weeks.
So it's free. It's free training. I mean, it is free to them, and you can still look for a job in that period of time. But it's basically just kind of teaching you the skills. Because if you don't have a job right now, if you're unemployed or underemployed, it's to teach you the skills to get you into office and professional careers. So that's what the goal of it is. And I mean, I think it's a great program and it's a free resource to the community. So I think that's something that is highly slept on and you're basically guaranteed a job because you'll be working directly with me. I get paid when you get a job. So I'm gonna find you a job. Like we gonna do this. So anyway, that was very long-winded. It was only a couple minutes. Anyway, Red, how's your week going?
Hey, I'm feeling good. Y'all know already. COVID tried to take a boy down last week. Yeah, but it was real mild. I'm feeling 98.72% back.
Okay.
I coughed like 3 times today. No fever. Your boy never had no shortness of breath or nothing like that.
That's good.
But I tell you right now, I want some corn. Rich over here throwing down. Look. Hey. For those of you that are watching this video, hold on, real quick. Those of you that are watching this video. Go back to the beginning of this video and see when he had the corn before he officially did the intro. That corn is so seasoned like a box of Crayola crayons. I ain't lying at all.
Hey, look.
Y'all know how that yellow box had a little orange and a green? They look just like that boy Corn. I ain't lying at all.
stupid.
This shit is delicious. Let me just start off there. My wife cooked, and the shit is delicious. But for all my people that know me, they know I eat on whether it's a Frito pie, nachos, hot dogs. You know the
you be eating glizzies on there.
I mean, you don't want to say it like that.
He was the glizzy gobbler.
You do the glizzy?
I had a knife and a fork.
He did not have no knife. The lies he tells.
Hold on. Wait. Pause. I'm upset that you think it's better to eat a glizzy with a knife. That's just demonic. Like,
first off, since when did it become a bad idea to eat a hood staple? Like when was it a bad idea?
When you have to do that to do it.
Hood staples, hot dogs. When you were broke, that 69-cent pack of hot dogs can feed you. The canned chili was like $1. Come on, man.
I'm just letting you know.
You can feed a whole family with $5 some hot dogs. Absolutely. That's a staple at every kid's birthday party. I ain't buying pizza. Fuck hot dogs. Y'all about to get these hot dogs on this grill with this chili and this cheese.
Local brand chips. The local brand chips. If you from Detroit, you was getting better made.
And some hugs.
And you was getting some hugs. If it was a fancy party, you had some big old pop.
Speaking of hugs and juices, I would like everyone to point out and let Brad know that it is called soda, not pop. We're not popping nobody.
It depends.
Not hitting nobody. It is called soda.
It's all about where you reside relative to the Mason-Dixon line. That's all it is. It's pop if you up north, and it's soda if you down south. But guess what?
I have to code switch when I go home, so I get it.
But guess what? It doesn't matter what it is. It's all high fructose corn syrup that's been killing black folk for 100 years. That's what it all is at the end of the day.
Not wrong.
But it's delicious as fuck. So
not wrong. It is the reason behind diabetes.
It's delicious as fuck. That's what it is. I got a glass of Kool-Aid right behind this computer screen. I mean, fucking delicious.
Hey,
but hey, Uncle Joe Beasy. Before we start, Uncle Joe Beasy said that the pandemic is over.
When did he say that?
I definitely heard that. He did say that.
Yeah, Uncle Joe Beasy was like, "What? COVID pandemic? It's over."
Meanwhile, Brad is still coughing. You Google it. It happened. He said it. We'll probably talk more about it on Saturday. He said that for sure. Which is crazy. Like you, as the president, you got to triple check what comes out your mouth before you say it.
Well,
because you sounding like Trump. Well, I wish it was over by Easter. That's my favorite holiday. I'm
gonna just put it this way: it's the World Health Organization that declared it a pandemic in the first place. So until they say something, we in a panorama.
And that's true. But we're still getting like completely contradicting things. Like wear a mask, don't wear a mask, do this, do that. Like at this point, they don't give a fuck anymore.
Well, everything is privatized now. You don't have to wear a mask. It depends on the company that you go to.
The CDC, which works for the government, is saying something different from the World Health Organization, which is what advises the entire world. So that's where we get confused. We all just think it's just this one person. It's different people giving different things.
They only buy shit in this house.
One thing, and then there you go. And then you
they only buy shit in this house. And that's how Uncle Joe Beasy felt. They only buy shit in this White House.
Both him and his wife have caught it in the last month and a half. However, it's over.
Right. Like
he was the last one. He said, "I'm the last one to catch it. Everybody else, we done."
Except I just had it, so no.
Exactly.
He said you had the flu. He said you had the flu, not COVID.
Oh, he was so.
He said it's different. Yeah, he said you had the flu.
That's cool.
This
ain't got a damn thing to do with financial literacy. We
absolutely nothing.
People like, this shit talk Saturday?
It's Tuesday? What day is it? Not to confuse you guys. We are here to talk about some more financial literacy. We're really just going to kind of go over some of the terms that we may not have really touched bases on completely. Go back over some of the things we've talked about this month. More or less. I think the rest of this month is... Tomorrow we're talking about businesses, entrepreneurship, LLCs, and next week we're talking about And next week we're talking about starting a nonprofit, and how to get grant money. So this is kind of just a summary of all the financial literacy terms that we've been talking about so that everyone's on the same page. We're all working towards generational wealth. We're all trying to be better Black people than we were the day before. And to fight the system, because the system doesn't want us to be great. So we have to spread this knowledge and this news so that we can be better members of society, essentially, right? So jumping right in, who's gonna start off with their turn?
You guys can, but before we jump in, I would just
You got to
like to let
finish that
everybody know-
corn.
No. This is not financial advice. This is just information. All right. So everything that we say, take it with a grain of salt. Please do your own research. Please do your own, search your own stuff. We're just giving out information for informational purposes only. All right.
So, absolutely.
There we go.
This is now an entertaining podcast. We're just trying to teach y'all. Each one teach one.
Yeah, each one teach one with what we learned from some niggas back in the day.
Big facts. So I guess I'll start with mine because I feel like, well, no. Actually, Brad, I think you should go first. Yours is about making money. Mine's about spending it. So
okay. So you want me to talk about the gross versus the net?
Mm-hmm.
All right. So gross versus net. I'm gonna go just kind of the basic. Gross is everything that you've earned. Net is what you actually get. So when you get your paycheck, for example, let's say that you get a job, your job pays you. Let's say Brittany gets you hired, she gets you making $20 an hour. Let's say for easy round numbers, you work 100 hours in the time frame. I'm just for easy round numbers, $20 an hour, $20 an hour, 100 hours. That's $2,000, right? I just had to do that mental math real quick.
I saw the gears turning.
I wasn't trying to embarrass myself. You know what I'm saying?
Rich does it all the time. No worries.
I got to represent Detroit public schools the right way. Just damn, what the
whole pork chop. And we thought this was going to be a boring episode. I mean, at least the background is entertaining.
We got the whole goddamn pig in his hand. That's right there. All right. At least go. Hey,
excuse me.
Why his towel match his shirt? That's
because we bloody. No, we're not. Hey,
don't come after me.
Right.
Let me get back on track. All right. So $20 an hour, you work 100 hours, you're gonna get $2,000. That's your gross, right? But then you see federal taxes come out. You see state taxes come out. You might see city taxes come out. Maybe you got some health insurance. Maybe you got some child support, right? So all of a sudden, that $2,000 is $1,362, something like that, right? That's your net, right? So if you're owning a business, let's say your gross profit versus your net profit, right? Your gross profit, let's say you have this item. Let's say that you have just something simple. Let's say that you have a shop where you sell cookies. All you do is sell cookies, right? Let's say the cookie that you sell is $1, right? Let's say a chocolate chip cookie. You sell a chocolate chip cookie for $1. Right. And let's say the cost of everything to make your cookie dough with your chips and your sugar and everything else that you put into your recipe for cookies. Let's say that each cookie runs you about 35 cents to make, right? That would mean that your gross profit is 65 cents on that cookie. Does that make sense?
Mm-hmm.
Right. Mm-hmm.
Now, your net profit would say, okay, I sold 1,000 cookies, meaning that I started off with $1,000 in revenue, right? But after not only the cost of making a cookie, so that was $350, right? 35 cents a cookie, 100 cookie. All right, we got there. Or 1,000 cookies, whatever. We got there. $350, right? But then also the light bill was $50. Also the gas bill was $50. Also the water bill was $50. And now that's $500. And let's say you own the building rent free, right? So you don't have to pay a lease or anything like that. Now you spent $500. So your total net profit is $500. So your gross profit is just everything that you're just getting off the top. Your net is when it's all said and done off the bottom. Right. So if you take a job where they say we're going to pay you 10% of the net profit, that means you're getting paid 10% off the bottom, right? If they say you get a job that says you get paid 10% of your gross profit, that means you get paid 10% off the top. Makes sense? So your check, when it you see that tax statement that or your W-2 at the end of the year for your job, and maybe your W-2 says that you made $50,000, right? You're like, where the hell did I spend $50,000 at? You paid taxes, you paid insurance, you paid Social Security, you paid everything else, right? So understanding gross versus net. Gross is off the top, net is off the bottom. Does that make sense?
Right. And remember, guys, a lot of the stuff that you get taxed on when you're in your tax bracket or whatever, right? You're getting taxed on the money that you bring home. All right. So even though I made 100,000, right? When you take in expenses, deductions, I made 100,000, if I bring home 40,000, which is absurd if you guys losing that much, but let's say round numbers, you bring home 50,000, you're taxed at the end of the year on the 50,000 that you brought home. Okay. And that's the same way when it goes to business. If you own a business, when they say, how much did your business make? You say, okay, gross, we made $500,000 this year. Okay. How much did your business profit? They're going to ask you those two separate questions. How much did you profit? Oh, well, after expenses, we profit 200,000. Okay. Now your business is profitable. So when you guys are ever out there and you're doing loans and stuff like that, especially with the SBA, they're going to ask you, is your business profitable? They're not asking if you make money, because you can make 500,000, spend 500,000 or go negative into it and not be profitable, which means that they won't give you, no bank is really going to loan to you because you don't make money. You see what I'm saying? Your money that comes in goes right to expenses. So they don't see it as making money. They see it as a loss.
Right.
And after so many losses, I think it's about 3 years in a row, 3 to 4 years in a row, it's no longer a business, it's a hobby. Because that's how the IRS will look at it. They'll say this isn't a business, this is a hobby, because you take a loss every year. And no legit business
profitable business, right,
can sustain 3-4 years taking a loss every year. You have to be profitable at some point to sustain in business. So that's just a little extra.
And I think you saw a lot of that in the pandemic with smaller businesses, and that was just, a year and a half time period of just not being able to make up whatever deficit they went into the pandemic.
Right.
The only businesses that really lasted were ones that were doing really well prior to, and were able, and, were either emergency, businesses, or the ones they were considered essential, or they had, the backing of having been profitable for a while in order to sustain.
Go ahead, Brad.
I was going to say, let me add that back to Rich's point. That doesn't mean that it's time for you to give up your business. It means it's time for you to seriously analyze what your business is doing at that point. And I know we're not necessarily, I don't want to dig deep into that topic, but I just want to say that you might start a business and it might take you 5 or 6 years to turn a profit. Can you maintain another job, in that time frame? It's your family life.
Or even still, when we say to turn a profit, that means extra money. If your expenses are lined inside of that, right? And say you make enough money to pay your bills and this and that, and you're an employee salary, a part of that, and you, while owning your business, then keep going. It just means that you need to be able to turn a profit eventually down the road. Right. It doesn't mean that you need to stop. Like, as he said, it doesn't mean quit. It just means that you need to turn a profit down the road, which means that you probably need to cut expenses somewhere else inside of it. Maybe your employee, your employee rate is too high. Your labor rate is too high. You got a job that only requires 3 people and you got 6 people there. Maybe that's something that you need to cut back on. A lot of people, for businesses, a lot of business major expense is employees. Their employees are the biggest part of their expense because labor rate is fucking ridiculous.
Absolutely.
Not to mention maybe at least, and that was part of the reason why a lot of businesses closed during the pandemic, especially a lot of smaller businesses where the lease is due. I have to pay $10,000 for rent, in this strip center, but my business is closed. Well, I'm not making anything. And I still owe 10,000. So now I'm negative 10,000. Well, my business was already just about to be negative anyway. And now I can't open. And maybe I wasn't making very much to begin with. If I'm only making, 20,000 a month, and I know a lot of people like 20,000 a month, that's a lot of money. On a business side, it's not.
Right.
On a business side of things, $20,000 a month is very low.
Well, I would say it's relative to what the expenses are. It's your gross versus your net at that point.
Well, right? Yeah. If you bring whatever you're doing, so like $20,000 a month in credit repair is amazing, right? It's because typically your expenses are very low,
right?
If you own a YouTube channel or podcast or something like that, and you make it $20,000 a month, that's great because your expenses are rather low. But if you own a cookie shop where you have to buy equipment, food, rent, lights, stuff like that, typically those expenses will be higher. And if you're making 20,000, well, your expenses, because remember, rent by itself, if you choose a decent area because you want foot traffic, if your rent is $10,000, well, if you only make 20,000 for the month, literally half of your expenses is just rent. That does not include labor. That does not include any repairs you might have to do. That does not include the light bill, water bill. It does not include you taking money for yourself to go home with. It doesn't include a lot of that stuff. So typically, that's on the lower end for a business that's scaling. That's pretty low. 20,000 in cookie sales is not great. Go to Great American Cookies or whatever cookies. They'll tell you that they make $20,000 a week, not a month. Mm-hmm. They make $20,000 a week. And on fast food end, that's low. Like $20,000 a week for fast food is on a low end. That's $1 million place. But McDonald's is turning $25,000, $30,000, $40,000, $50,000 a week, just through how much people come through there and spend their money. So
we're getting off topic, but I want to add on to Richard's point while we're on the business and food things like that, right. So I used to work at an Annie Ann's Pretzels. Annie Ann's Pretzels is in every mall. I swear to God, I've ever been in. I love Annie Ann's Pretzels. Even the most decrepit mall has an Annie Ann's Pretzels. Am I wrong? No. All right. So, they make the dough there, and all the pretzels are made, right there. They have an oven. They make them. They put them out in a little case, whatever, blah blah blah. Right.
And I buy them.
So exactly right. Mm-hmm. So I remember one plain pretzel. Who knows? This is well over 10 years ago. But I remember one plain pretzel. The way they priced it out was after tax, it would be $3 if you wanted a plain pretzel with absolutely nothing else, right? The way that it worked is that one plain pretzel covered an entire batch of dough.
Bingo.
Mm. One plain pretzel would cover an entire batch of dough. So when they made 17 pretzels out of it, plus like 38 cups of pretzel nuggets and 36 cups of pretzel sticks and pizza pretzels and all of that, all they had to sell was one pretzel to cover the cost of that entire
box. Mm-hmm. Yep, Jersey Mike's was like that. So in a box of subs, 60 frozen subs will come in it, right? So that
their
one
subs
box
are frozen.
So their dough is.
Oh, okay.
Not the subs. Their dough
I was like
that you have to then thaw. Yeah, you thaw it out, you stretch it. So their dough is. But
over here dropping secrets.
That one box is only $18. That one box is $18.
Mm-hmm.
Their sandwich by itself for a giant one length dough for a giant sub is $17.45. They're literally 60 times the amount. And you'll go through 2.5 boxes a day of bread. And at an average price of about $17 per sandwich. They're making 60 times the amount. But you know what eats up their cost? Labor. So where they're like, yeah, $17 per sandwich, but I'm also paying almost $15 an hour per person to work. Mm-hmm. So that's where they're like, oh, wait, why is that so high? Or, that's morally wrong. And no, you got to think of all the things that come into play when it comes to running that store and how much it costs to actually run it.
So we'll leave it here. We should probably get back on track. But if you guys ever watch Shark Tank and people are making their presentation to the sharks, right? Somebody, typically Mark Cuban, will ask, how much do you cost? How much does it cost you to make this? It costs X amount of dollars. And then they'll say, how much do you sell it for? It costs this amount of dollars, right? And then they'll either go, or they'll go, ah. What they're worried about, not so much the raw dollars that it's bringing in. So like what Rich was saying is that $20,000 might be good for this, but it might not be good for that. It's about the percentages of the profit, right? If you can, if your profit markup is what do we want? 2/3 typically.
You definitely want to, not even, I want to say you almost want to double the profit, right? Somewhere it's about almost either 2 or 3 times the amount is what you want to do. So if it costs me $1, if it costs me $1 to make something, I want to sell that dollar for at least $3.
Right. That's what I meant by 2/3. Yeah.
I want to sell it for at least $3 because it covers what I paid for it, any incidental, and then an actual profit to take home. So you got to remember that business people don't do this shit just to give it away to people. They want money to take home, and so that's that. But that's essentially that's still the same thing, just within gross and net. That's what it is in the simplest form.
Right. What we doing next? What we doing next, Brittany?
So since we already own it and we're talking about gross and net, we can go ahead and just skip right into interest rates, right? Which is some of the biggest things that people have an issue with when they're coming up. If you don't know your interest rates, people, for those that like to buy cars.
Wait, Rich, before we do that, do we want to knock out net worth real quick? Gross net worth?
I mean, we can, but my thing about net worth is, and I know this is going to be Brittany's panel, but my thing about net worth is it's so skewed because it whose net worth is it?
It's Brad.
Oh, okay. It's skewed, and so I don't like net worths because it's very skewed. Because I can inherit $1 million home. That'll take a part of my net worth and be broke as fuck. So like, and even though my net worth says $1 million, they be like, oh damn, Rich worth $1 million. Nah, Rich ain't got shit. I don't own any money. I don't have anything.
You just have a house worth.
Exactly.
So Rich basically said it, so we might as well just do it now. Net worth is the total value of your assets, which are both money and businesses or things that you own, minus your liabilities, right? That's your debts and the bills that you typically have to pay, right? So when you hear someone say, you may hear Rich say, he has a net worth of $1 million per se, right? But that does not mean that he has $1 million sitting in the bank. He could have $95 in the bank and have the other 999,000 and whatever that number gonna be. I almost got there. He could have the rest of it into assets, into trust funds, into businesses that he's owning, things of that nature, into stocks, into a multitude of things. So net worth does not mean how much money's in the bank, right? You could have a negative net worth. So Rich was on, oh no, this was Shit Talk Saturday, where Fred was on with me and Rich here a week and a half or so ago. But we had talked about R. Kelly because everything he's going through, he has a net worth of negative $2 million. It does not mean he has a negative $2 million bank account balance. You'll see Brittany eyes got wide as hell with that number. That's crazy, right? What that means is that the assets that he has minus the liabilities that he has totals to negative $2 million. Right, is what that is. So
and it could be the flip opposite for a lot of rich people, millionaires, billionaires. It's actually the opposite. So they have a net worth of, or like, Jay-Z has said he has a net worth of like 1.2 billion, right? But his bank accounts way past that, because they don't take your bank account into account when it comes to your net worth. Your bank account, what's in your bank account is not added. It's only assets that you have.
Well,
that includes your net worth.
I think a better example is LeBron. Didn't LeBron hit $1 billion? Yeah, earlier this year, LeBron hit a billionaire, a net worth of $1 billion. That's not how much money he has in the bank at all. He has way less money than that, because $1 billion is a lot of money. But it's the sponsorships deal that he has for the money that's incoming from Nike and from his NBA contracts and things of that nature. It's the businesses that he owns that he's invested into, the different brands and things of that nature that total his net worth to $1 billion. LeBron does not have $1 billion in the bank, but he does have access to over $1 billion, depending on
Because I think so. Like Soldier Boy was one of them, and Chris Brown was one of them, where their net worth is lower because they don't have as many assets, right?
Yeah.
So, but they might have a lot of money in the bank.
A lot of money, but a lot of bills. Big ass,
right?
$2 million a month mortgages.
Like right now, I would say I have no net worth. Oh, well, okay, that's wrong. But let's say my cousin has no net worth because they don't. No. Because don't just laugh yet. Listen,
don't laugh yet. It's gonna get better.
That was shady.
No. When I say this, because they have no assets. They rent their home, they rent their car, they rent these things. So they technically have no net worth because there's nothing that belongs to them, but they have a decent amount of money in their bank account. Right. But when you try to figure out what their net worth is, it's zero because they don't own any assets. And until you own a home or own things that you can sell, you have no net worth because you don't have anything that you can liquidate to give away. You see what I'm saying?
Yeah, I get it. So to segue just kind of off of that, what my words were assets, liabilities, and investment. So since we're already talking about that, just to define what an asset is, according to the dictionary, it says it's a thing for regarded as having value and available to meet debts and commitments versus a liability, which is a thing for which someone is responsible, especially a debt or financial obligation. So basically, assets make you money, liabilities, you spend money, you lose money. Assets can become liabilities can become assets. So for instance, if you buy an extremely expensive car and all you do is drive that car around all day, you're wasting money on gas, you got to get your oil changed, like that becomes a liability. But when you then take that same car and you put it on what is it, Turo.
Yeah, not turbo.
And you put it on whatever, put it on Turo, or honestly, even like if you use it, no one would use it as an Uber driver, but just anything that brings in income because they want it. Like, unless you're getting like,
you have Uber luxury. You have Uber luxury. Yeah, you do.
True.
It's expensive as fuck, but you have it.
It's there.
So, I have an example of a liability that can become an asset. I have a car right now. This is not a scenario. This is real.
It's not a joke. He has a car right now.
I have a car right now. I am right side up on my loan. I owe give or take $18,000 on it. The value is give or take $24,000. Right? I am right side up. It's still a liability because it's a bill. However, I could sell it, pay off my loan, and it's therefore an asset at that point because now it's just cash.
Well, no, remember, assets have to make money. They can't just be worth it. It can't be worth money. It has to make money. So you can take the car, even though you're right side up on it, and it just has positive equity in it. And it's the same with your home. You can have positive equity in your home and it still not be considered an asset because you don't use it to make money. Assets have to bring in money.
I'm saying it would be an asset if I sold it. Or you sold
it. It would no longer be yours.
It's no longer an asset to you.
Yeah,
so,
you're right.
You just sold it.
You're right.
Now, if you took it, you upgraded it to a Benz, and then you took the Benz and rented the Benz out.
Okay.
It's an asset now. It brings you in money.
Okay.
But you have to make sure that it brings in enough to cover at minimum what you pay for it. So if you pay $600 a month for it, you need to rent it for at least $600 a month. Otherwise, it's not an asset anymore. It's still a liability because you rent it for way less than what you owe on it or what you need to pay for it.
And so this is exactly why we have those conversations. Because look, your boy got educated right here.
He was over here like, I'm gonna sell it, and it's like, well,
no, that's not an asset money,
but it's not constantly making you money. Same for like houses and
it's a liability with positive equity. Then
yes,
right,
which is what most homes are. Most people's homes are liabilities with positive equity in them. Now, what you do with that equity when you take it out, that can create the asset.
This is why we're not financial advisors.
This is why we're not advising. We're just giving out information.
Hey,
That's
Rich
all
put
we're
out the
doing.
disclaimer at the beginning. If you didn't hear it, press rewind. He did it. I promise you, he did.
You
Yep.
did do it.
So, but yeah, so you just take that, whatever you use with that equity to go buy an asset, a business, or real estate that's still going to make you money, things like that. Then it becomes an asset. But until then, it is still just a liability. Most things in life are liabilities. Most things.
You put more into it than you get out of.
Yep.
Unless you start doing, unless you put it on Turo, or you do an Airbnb with a rental property that you own, or you own a multi-family residence, and even if you live in one of the units, the other three, they're paying off the the mortgage of the place. So yes, and then investments is just obviously like what you spend your money in. What do you invest in, whether it's a liability, an asset, other. But when we had the other day, geez, Brittany, I have to get better. When we had AB Ridgeway on the other day, he was talking about how you're always investing something. Whether you think you are or not, you have put your time and your money into something. It might be food, it might be, lottery tickets, but you have invested your time and your money into something. And so I guess my question to you guys would be, what is something that you would like to invest in the future, or you have invested in that's been profitable for you?
So for me, I do businesses. So I buy businesses. And so one day I just have to make sure that those businesses are profitable in a sense of every month, whatever, like we talked about, our gross, our net, but make sure that the income coming into the business is more than the expenses going out of it. If it turns a good profit, I believe the business is solid, has a great, foundation, has a great business model. I think it's something that's going to last for a while. Then I'll go and I'll buy that. Most people buy real estate, and they do that route, But me, I'm more interested in businesses and things like that, where some people might be more interested in, stocks or some shit like that.
Right. Brad, is there anything that you are in particular interested in investing in?
Real estate for sure. In particular, multifamily real estate. I attended something earlier this summer. Really put the battery in my back. I want to get my stuff together within the next couple of years. I want to own an apartment building. It's aggressive.
I feel that.
Why are you waiting years?
I said I got to get myself together.
But it don't take years. That's what
it don't take years. I'm not saying I'm waiting. I'm just saying what I expect.
Okay. All right, because I think that's one of the biggest things that stop us, right? And I'm not saying you specifically,
I know what you mean.
but just us people in general, like, man, okay, I need to do this first. Okay, then I need to go do this first. Okay, then I need to go do this. And then I need to go do that, and then I can go and buy the real estate. And then before you know it, life done happened, and now
life is life, and
life done kicked in 6 more steps that you need to do before you do it, and before you know it, it's 4 or 5 years later. You still ain't got it. Versus, I'm not saying be ridiculous, go out there and just like, yeah, fuck it, jump head first without doing research. No, what I'm saying is at some point, I believe that there's no such thing as the right time, right? You have to create the right time. You create it by doing the research and by saying, you know what? It's an investment either way. Either I'm going to invest my time, my money, and go for it, or I'm just going to waste time, waste money, not going for it. And right. I'm telling you right now, if you think the bill for trying is expensive, wait till you get the bill of regret and see how much more expensive that is. Right? Like at some point, you got to go for it. You got to try it. You got to leap. You got to go, because at the end of the day, you only got one life to live, and it's just you. And if you're not going to be the martyr and the person that starts it, and you always wait on the next person and wait on the next person, you're going to be waiting forever. Y'all got the same type of mindset. Right. You're going to be waiting forever. So fuck it, go for it. If you say, you know what, apartment buildings, and when you do the research, it's easier to buy a multifamily home than it is a single family home. It's easier. Banks would rather give you the money for that than to give you the
because
loan
they know
for
they're
you
going
to
to get
go.
their money back because
Exactly.
you're going to get money from other people.
They because if they take it back from you, they know that they're going to get a bigger investment from that than they would a single family home where they got to go find somebody to live in it for 30 years.
Mm-hmm.
Right.
So,
I feel you.
just go for it.
Same here. Real estate as well, to an extent. We recently, in the last few months, after meeting Brad and Fred, learned that the housing loan that veterans get, the VA loan that you get, that you can get it more than once. We didn't know that, so we were like, I go out, get this multifamily unit, or something that's within it, rent it out, pay it back, do it again, pay it back, get a nice ass house for ourselves, like you know what I mean, or whatever the case may be. So that's definitely something that we're interested. I say we because obviously Jamal and I are a unit. But I definitely want to kind of invest in the indoor playground that you mentioned the other day. I also want to invest in businesses that my children would enjoy. And I want to start a cereal bar. So those are the things I plan on doing with my monies in the future, in order to help create generational wealth.
I'll throw this on since I'm here too. Maybe right around the time I met Rich, but before I knew what Rich was into, I had the thought to do a gaming truck as well. So I want to.
It's okay.
I want to get.
We
into
won't
that
think you're ripping him.
All right.
Yeah, he's in Houston. You in Detroit. It's cool.
All right. Exactly. We ain't talking about you, Rich. Go ahead.
Let me just tell you, in Detroit, in the wintertime, the ability to be able to have a party in a gaming truck, what? Because you can't do shit else, so I can pull up at your house and you can still have a good birthday.
Exactly.
Because after a certain age, Chuck E. Cheese ain't the move.
I'm telling you,
over here like, why was I born in January?
The things like that, and Jamal wrote it up. He said he wants to start a card game. So like me and my wife, like I said, we buy businesses or we look to start businesses as our portfolio.
Your portfolio,
for our assets, right? So I want to start a card shop where people come and they play games like Yu-Gi-Oh, Magic, Pokemon, Force of Will, things like that, and stuff like that. I want one of those.
It's very similar to my cereal bar because I wanted to also have games.
Brittany started a juice company where it's I Got the Juice, where she creates juices and she's going to sell them with Jordans. She's not going to sell the juice and Jordans, but like they're of Jordans. So you go into her store and you can buy shoes and buy drinks at the same time.
That's
kind of if you want to do a little kickback. We're going to look into buying an indoor playground or a trampoline park. These places are expensive, but they are solid revenue places for kids. You're always going to have kids. Kids always want to bounce. Parents are always going to always want to throw a birthday party that's not at their house all the time. And if it's indoor, all the better, because that means that weather doesn't affect it. Nothing changes that except for make sure your lights is on and stuff like that. So these are solid business plans that people love, which is why they're always on the higher end of doing it, right? When they're like, oh man, I can start a trampoline park. Well, unless you got like $1 million+,
right?
Yeah, you can't. And they're like, damn, $1 million. So like, well, yeah, but it makes you 2.4 million. So I'll spend $1 million to make 2.4 million, and just making sure that, we go through stuff like that.
I feel that. So Rich, if you would like to jump into what we cut you off from.
Rates. We were talking about interest rates.
Yeah.
Let's go.
And so our interest rates is what our folk needs to look at. This is where having good credit or having bad credit will really affect you. And a lot of people do not understand that until it's time to do it. When you go get a car, if your car interest rate, and I don't mean to call nobody out, so if you got it, you ain't got to say me. If your car interest rate is anything over that, I would say the average is about 8%. If it's over that, you have bad credit. And I'm telling you right now. So if you're walking around with 14, 15 from military folk, 29% APR, 29% interest rate, my brother,
They didn't want to give it to you.
They gave it to you because they knew that with your bad credit, you are a high risk loan.
Mm-hmm.
And they were like, cool, let me add 29% of interest, which means that I'm gonna let you borrow 30,000. You're gonna pay me back 30,000
Plus.
on top of that, plus 29% of 30,000 over the time period. So 29% of 30,000 over the time
8,700.
period, over the time period that I'm going to be doing it, that you're going to be doing this at. So if you buy a $30,000 vehicle, you at 28%, you're looking at spending 42,000 back. Because where if you bought a $30,000 vehicle, you have good credit, and your percentage, just say your APR is like 2, instead of spending back 30, you spent back 33. We bought the same car, but I got to spend 42. You got to spend 33.
Let me jump in here too. I used to, for a brief period of my life, I was a car salesman at a buy here, pay here dealership.
Used
terrible. You
were greasy.
Let's talk about it.
Matilda head ass boy.
Let's talk about it. Buy here, pay here. Right now, I lived in Ohio at this point in life, and your maximum interest rate is relative to the state that you live in. So in Ohio, the maximum interest rate is 24.99%. All right. So not only were these cars overpriced in general, right? Number one. Number two, the cars, the buy here, pay here means that they act as the bank. So we'll get you approved no matter what. They act as the bank. All right, let me peel back the business. Car dealerships tend to buy their cars on what's called consignment. You guys know what that is?
Mm-hmm.
Explain to the people. They don't know. I'm gonna say I don't know for the people.
Consignment is, it's a hard money loan. What you guys were just talking about with Nisha J last week, right?
Mm-hmm.
So what Nisha J talked about was you get a hard money loan where you only paying the interest for a certain time period, but the loan is due after typically after within 6 months, right? And they give you a hard money loan because they expect you to sell it and to come through with that money pretty quickly. So what consignment is that you pay just a piece, not even a piece. The dealership essentially rents the car, and then once they have somebody to buy the car, then they pay for the price that they pay for, right? So that buy here, pay here place might only need to pay $4,000 for this car that they're going to charge you $15,000, but then they're only renting it until you buy it. So while it's sitting on the car lot, they might pay $150 a week. So maybe it sits there for 3 weeks, so that's $450. Then you're ready to buy it. You commit to $15,000, so they're going to go ahead and pay the $4,000 that car costs, right?
Mm-hmm.
But they're going to also charge you not only the $15,000, they're going to charge you an interest rate of 24.999%, right? Which means that when that's all said and done, you will have paid whatever,
for
right?
a few of them cars.
You would have paid over. Let's say because what you're missing, what they also get you with.
I was about to get it too.
It's how long you have to pay it back.
Yep.
So
72 months.
That's their sweet spot. 72 months. 70. Oh, we can do. You want 96? We'll give you 96. My brother, if you ever go out and buy a car for 96 months, you have lost your fucking mind. I just want to put that out there. Any interest rate over 96 months is too goddamn long.
Now let me say this. The reason why we're having these conversations about financial literacy is because you need to know what you're getting into. If you're in a situation where the buy here, pay here place is the only place you can go and get a car, it is what it is. But at least you have the knowledge of understanding what you're getting into. What we don't want is you going and paying 4 times the price of a car and then paying the highest interest rate possible on top of that, where for half the price you could get a car that's 10 years newer. That's what we don't want.
My thing with that one is if you know you're in a spot where buy here, pay here is what you can do, right? I think at that point is where you need to start thinking. You need to start changing your mindset as to what you can afford, because you're still trying to live a life of where like, oh yeah, I gotta be up here, rather than like, you know what? Is it easier for me? Because like Jason brought up during tax time, is it easier for me to just take $3,000, go buy a cash car? Don't have to worry about a car note. Don't have to worry about any of that. I go buy that, bring it back. I know it's a 98. Oh, I know it's a 2005. I know it's not sexy. Or should I go to the buy here, pay here, buy the 2020 that's on the lot, put 3,000 down, get it 24% interest rate. You know what I'm saying? Get it repoed anyway. So now I lost my $3,000. I still owe for the car. And you know what I'm saying? Like at that point, people, I think we need to start realizing or checking what our lifestyle is like.
Your priorities.
Sometimes you got to take 2 steps back to take 5 jumps forward.
Sometimes you got to take the bus a little longer and hit up RDI Financial.
Yeah, you do. You do.
Segue.
But that's the thing. It's not taking 2 steps back. You're already back there. You're already in the back.
Okay, you're right.
So oh man, I don't want to go any lower. Sway, your credit score is already low. Like you're already at the bottom. The only way to go is up, but there's certain ways. Love you. Good night. There's certain ways there's certain things that you have to do to get them done.
Let me comment on this.
So wait, them buy here, get here spots, getting crafty these days. They giving people cars for 150 down, straight up trap with high interest.
Here's the thing: they're the bank, so they get to determine what your loan is, right? So to his point, when I first got there, we were doing bring any car.
Tow it in, push it in.
Any car. It counted as $1,000 down.
And it don't matter what it is. The car could have been on bricks.
If you could bring it in, all you have to do is drive it. If you could turn it on and drive it there,
because you know what they're gonna do, and they're gonna take that car, they're gonna buy it from you for $1,000. They're going to sell that car for more than $1,000. They're gonna take it to a cash lot and they're gonna sell it to somebody, or they get the mechanics, fix it up a little bit, move it, and then they bought it for $1,000. They can sell it for $3,000. They've made their money. That's good money to them. So they bought it for $1,000, sell it for $3,000, sell it for $4,000, whatever, and then they still got you in a car. They still got your money for the loan. They still got you at this high interest rate. And that's where they're getting you. People go in and they're worried about their car note. Don't go into a car dealership worried about your car note. Go in worried about your interest rate. You be like, oh yeah, just give me a $500 car note, and they be like, oh, okay, shit, I can move your down payment to here. I can move your months to here, but your interest rate, it done changed. It went from being 13 to 17 or to 20, and you ain't even noticed that. And then they got your payment right where they want it to be. But like, oh man, we couldn't get it to 500, but we got to 519. Come on, bro, it's only $19 more. You see what I'm saying? And that's how they get them, because you thinking, oh man, it's only $19 more. That's cool. And then when you realize, you be like, damn, I've been paying on this car for the last 6 years. It still ain't paid off.
Right.
You ran out of warranty your first year.
You be feeling like student loans out here, still paying that bitch.
I'm telling you. And then there's a difference, because you have the two biggest things that what we have, the difference between the two rates is there's fixed interest rates, which is a set number that's going to be throughout your entire loan term, right? Which are mostly car interest rates, right? So credit cards, they'll hit you 29% fixed rate. It's not changing. But then you'll have certain interest rates that fluctuates, which is your variable interest rates. So that could be your mortgage, where 1 year your mortgage rate might be 2%. And then depending on how property taxes work, depending on how state legislation works, it could go to 6%. It could go to whatever it needs to be. And it'll fluctuate back and forth between the 30 years, you know? So I had an awesome professor, you know what I'm saying? Mr. Thomas, he know exactly what it is.
Shout out, Mr. Thomas.
I just want to say that episode this month has gotten the most listens because everyone thought that we were talking about the Supreme Court justice.
Hey.
Still a great conversation. I'm glad people tuned in, but
If
he
there's
is
any,
not Supreme Court Justice.
if
Clearly.
there's any other black people named Donald Trump for some reason, let us
we
know.
bring that nigga on too.
So that's the difference. But I want my people to focus on that fixed interest rate, man. I want them to focus on that, especially when it comes to cars. That's the number one area where most people go. Right, when they're talking about interest rates, they go for cars, credit cards. Most of your credit cards' interest rates are going to be high as hell anyway. But the goal for a credit card is to never have a high running over balance. So they can charge you. My Chase can say we want 50% interest rate. The goal for Chase is to never allow that credit card to have a running balance because it's over time. So if I spend $1,000 and I pay the $1,000 back before that due date, and when they go in and they check to see, okay, what's the balance going to be for the month? And it's at zero, I don't owe any interest. I can't give you what I don't owe. You know what I'm saying? I owe $0. So there's no interest on top of zero. So that's the thing that's the little difference with credit cards. Now, if you take that credit card and you max that thing out at $1,000 and you got 30% interest rate, and you're like, man, it went from being $1,000 to being, $1,200. Like now it's $1,500. Every time I turn around, it goes up and up and up. Well, that's because you have a high interest rate over time, and you're paying the minimum balance. You're paying just interest. You're not paying any principal on a credit card that you only pay minimum balance on every month, and it's maxed out. So that's that. You have to knock that stuff down when you're paying your car note. I know it sucks, but you want to pay that thing down as fast as possible. You want to add money on top of that because a lot of the time, half of your car note, if you're spending $400 on a car note, I guarantee you 200 of that 400 is interest.
Ooh, let's talk about that too. Because if you look at like any kind of loan that you get, when you look at the payments, it's not like even usually, right? Don't think that like a $400 payment with 25% interest means that 100 of that payment is going into interest and then 300 is going to the principal. Typically what you see, and Rich, you could probably explain a little bit better than I can, but typically what you see is a slope, right? So like it might be at the beginning of your loan, whether it be a car loan, a mortgage, anything like that. Most of this is actually interest, and then less of it is the principal, right? So that's why when you sign up to make that 7-year car loan payment, and after 3 years, you're like, well, dang, I should have had this thing paid off. No, you still owe $40-some thousand because you've been paying interest, right?
The whole
and
time.
then over time, what happens is that it balances out, and then you get to the point where you're eventually paying more principal than interest. It's designed to not be evenly split. It's designed for them to make their profit first and then for you to pay what you owe. And it shifts over time as well. So when you go to that car, that we go back to that buy here, pay here place, and you get that car that the dealership bought for $4,000, but they sold you for $15,000 with a 29% interest rate, right? And then you're getting that payment, that bi-weekly payment of $302 a week. $201 of that is probably interest,
right? And
then
what they don't know is
over time it shifts.
You can actually go in and when you do your payments, don't do auto pay, right? And I understand, like, what, Rich, don't do auto pay. When you do auto, that's why I encourage people to make extra payments exactly towards the principal only. So you can set up your payments where they're like, well, how much do you want to go towards principal? How much do you want to go towards interest? And you can set it up where you be like, okay, if I pay a $700 car note, I want $500 to go towards principal, $200 to go towards interest. And then you set it up and you break it down just like that. So a lot of times you can set up, but that's only if, first off, it's only certain banks that might allow it. But if you're able to flip it where you can decide where you want your payment to go. If not, majority of it is going to go towards interest unless you put money on top of that. And then that's when you'll start seeing, oh, okay, that's why my car note done dropped all the way down, because instead of paying $400 a month, I can afford it. Instead of paying $400, I pay $800. So I'm essentially doubling down on my car note. So even though the loan is for 72 months, I've knocked it down to half of that time, 36 months. And then you realize, oh man, you've paid a lot less on interest, so on and so forth. And so, that's how these rates work, and it's just something that banks do. Everybody, and I mean, typically anybody does it. You know what I'm saying? Banks don't make money off of 0% interest rates. So even when you go for a car and they be like, yeah, we'll give you 0% interest only for a year. You know what I'm saying? Because they won't make any money after that. If I loan you $400 and you only pay me back $400, I didn't make shit. What was the point of me giving it to you? The point of me doing it is to loan you 400, make 800, and do that with somebody else, and then go on and so on and so forth. That's how banks make money. With the also the people that might go into default, where I loaned you 400, you know, you owe me 800, but you never paid back, so that's defaulted now. So now I can go for collection to get this, get that, and then so on and so forth. Or if I sold you a car and you ain't make any payments on it, well, now I can take that car back. So not only did I take all the money that you've paid for the car, I take that car back, and now I can resell that car.
Mm-hmm.
So
let me just jump in on this real quick, because we talked a lot about the buy here, pay here place. Let's say you go to the traditional car dealership, right?
mm-hmm.
The traditional car
dealership, scums, straight savages.
Listen, first off, I wish Fred was here. Fred, if you in the comments by chance, say something. I don't think he is though. But when you go to, let's say your traditional Ford dealership, it's got Melfar, whoever it is. I just threw that Melfar out for you, Brittany. But first off, all they want to do is make a sale. Okay, so I recommend, you can tell me if I'm wrong. You, Mr. Thomas, in the comments, tell me if I'm wrong. I recommend going to your bank, going to your credit union, going somewhere outside of the dealership to see what you qualify for, right?
Yeah, they hate that. If you got Navy Fed, that's one of the best things to do.
Because when you go to the dealership, right, let's say that you get approved. Let's say your credit is not great. Let's say you get approved with a 12% interest rate. Okay. But let's say you go straight to the dealership and the dealership says, yeah, we got you approved, 14% interest rate. Sometimes these dealerships will cheat and add in an extra point or two on your interest. Mm-hmm. Yeah, we got you approved. This is what your payment going to be, this, that, and the other. Or you walked in there and said, you know what? I just want my payment to be $300 a month, right? Mm-hmm. Okay. There's no problem. We can get you something at $300 a month.
The thing is that what they're doing is it's very unethical, but a lot of them do it. They'll send your application to the bank, right? Mm-hmm. It'll come back. The bank will say 10%. Yes. You don't know that, but the bank will say 10%. Exactly. But when they come to you, the dealer is saying 13%. So what's happening is when they run all that stuff, they run through the files. They said you agreed to 13%. The bank only wants 10%. Guess what? Another 3% is going
to the dealership, to your salesman's commission,
to the dealership. That's what they're doing.
And here's the thing: when you go to that traditional dealership, here's what you have to understand: when you drive off the lot, that dealership is no longer connected to you. It's you and the bank.
Is that a decision made by like the manager of the dealership or the actual salesperson that you're dealing with?
It's typically the owner of the dealership who sets how he wants the dealership to run, which are just car dealerships nationwide. That's how the whole business is ran. The whole business is shady. The whole business is backwards, and they're not there for you. They're there to make the money that they want, which is why I like Brad's point. If you have a credit union, right? I just say Navy Federal because Navy Federal is something that me as a military guy that I'm used to, right?
Yeah, that's why I bank.
Go to a credit union. Most credit unions will work with people than major banks. But say you go, and here's another thing: you might not want your credit shotgunned everywhere. That adds a lot of inquiries to your credit, right? So if you know what, I already got a low credit score. Let me go to my credit union. They know me. I already have a relationship with them. They say, you know what, cool. This is what we think. What car are you looking at? Well, I'm looking at a 2017 Camaro SS. How much are they selling it for? Well, they want $52,000 for it. The bank's going to run it. They're going to run their scans. They're going to say, look, nope. The average selling price for a Camaro SS for 2017 is $35,000. We will give you $35,000 for that car. We'll write the check. Here you go. These are your terms that you agree to. Here's a check for $35,000. Yep. Boom. Exactly. When they ran by dealerships, the dealership will win because they'll come back with. They got relationship with banks that come back all kinds of crazy stuff.
Yeah, right? and then to that point, the dealership's job is to make a sale, right? So whereas Rich is talking Navy Federal, they will hit Navy Federal, Capital One, Chase, Wells Fargo, and 98 other banks, and then 3 other subprime lenders. Next thing you know, you suddenly have had your credit ran 13 times
Boom.
in one visit. Now
And
you
you
got
and they
13 hard inquiries in your credit in a 5-minute span.
mm-hmm. And then they be like, "Oh, we got one bank to approve you," when you could have got approved from 7 different banks, but they're gonna just take the best one for them. And they're gonna be like, "Oh yeah, we got you approved for this or whatever." And then when you go home the next few weeks, you got denial letters left and right because they didn't shot your credit to everybody. And you like, "What? I didn't even apply through GMC. How the hell did it? I didn't even go to GMC. I went to Ford. Well, they shot your bank through GMC's bank, or they shot it through Honda Financial, or they shot it through whoever." And then what they did was they were like, "Oh, okay.
Yikes.
Well, you know what? We couldn't get you there, so we're gonna get you here in-house finance. Don't worry about it. We done put a starter interrupter in your car. We done put all kinds of stuff in your car for if that way if you default on the loan, we can just come take it. We got a GPS in your car. We got all kinds of stuff." And it's crazy.
Straight up.
Stuff that people will do when you're realizing, like, you know what, maybe I just need a cash car because I'm not financially stable to go get this new car yet. You know what I'm saying? But that's what happens when you start living to please the Joneses or to please other people rather than doing stuff for you. Now, don't get it twisted. If for you, like for me, a C8 Corvette is my car. That's what I'm going to get. I that's the only car that I want. That's what I'm going to go for. So for me, I'm not saying that I'm gonna go for it, but they charge me 30% interest rate. I'm not changing that car. I want a C8 Corvette. I don't care. But I'm gonna have a C8 Corvette when I buy it, and I'm going to keep it for until my great grandson is coming back saying, "Dad, granddad, you got damn a gas car, we flying."
But you know what?
That's my dream car.
And that's the point that I'm making. Knowledge is power, right?
Absolutely.
If you know, it's better to know that you're going to pay 30% interest rather than to be tricked into paying 20 when you could only pay 10.
Right. Yeah. Definitely.
Absolutely. And I mean, that's the purpose of this episode and every episode we've done this month is knowledge is power. And I honestly feel like that is the best statement to end this on. I know we've talked a lot about credit this month, so if you are still unclear on what credit is, please listen to literally any other episode we've done this month. We've talked a lot about credit. We really just kind of wanted to go over some of the financial terms we haven't really defined and gone into as much. If you guys have any other questions or anything else you want us to address at a later date, let us know. Hit the comments. Like and follow us on all of our social medias. DM us. You'll get either myself or Rich or Jamal to respond to you. We're just dating Brad right now, so he will not be responding. However,
but if you hit me up, I got you.
You can hit up Brad. Y'all know where to find Brad. Brad's been here enough. What's Happening's been on here a lot. We've done a lot of partnerships with you guys. But so this episode, like every other episode, is sponsored by RDI Financial. Shout out to the homie keeping us going.
Well, our slogan is you can't help broke people being broke.
Absolutely.
At the end of the day, if you broke yourself, you can't help somebody else not be broke. All right. So we got to get these things fixed, man. Get that credit fixed and get that. Go ahead, give me a call. Send me you can send me an email, send me a DM. Go to www.rdifinancial.com. So you can book a consultation. RDI like dash financial, correct. www.rdi-financial.com. If you just go to rdifinancial.com, you'll go to another website. So
we don't want time.
Nah. Go there. You can book a consultation with me, and I'll get you on the straight path, man. Even if it ain't me working on your stuff, right? You just go in, and then I'll send you to the right person. If I don't know it, I'll find somebody that does know it to help you guys get on the right path.
I feel like we spelled financial wrong.
We got to FINANCIA.
No, it was wrong. Right. It's wrong.
That's right.
No, that's right. Yeah. FIN.
No, it's not the same as what's written there. I spelled it wrong. The I is in the wrong place. It should be CIAL and not in the comments.
Oh,
yeah. You spell Phoenicia.
RDI Fanatical.
I fixed
Yeah.
it. Did I fix it? I fixed it.
Yeah, Brittany can't spell. That's Brittany's fault.
I can't, y'all. I can't. And I have a private school education, so
Ooh, my
it's a
God.
shame.
Detroit
It's a
public
shame.
schools, baby.
Yeah, nah. I went to
I wouldn't gloat that
West
hard.
Bloomfield private school, Birmingham private.
I would
schools.
not gloat that hard on Detroit's public school system.
Hey,
but for all things unapologetically Black, you can find us on all streaming platforms. Please don't forget to like and subscribe. And as always, stay safe, stay healthy, and stay unapologetically Black.
Gang.
Have a great night.
Be smooth.